What up? Sorry it's been so long since I made a video. Last time was November 7th. But hey, what are you gonna do? I've been sick, been busy. Stuff happens. Today is November 30th, marking Mayhem. We got a couple quick notes. I told y'all that I was gonna talk about some of the uh, strategies I use to find good stocks. A couple that I've been looking at myself. So um, one thing I wanted to mention is something I just learned is that the tobacco industry on average gives about a 5.5% dividend yield, which is like ridiculous. The companies that you see every day that typically give the most, they offer around 3%. That'll be like utilities, the food industry, those sorts of companies. They typically give the biggest dividends, as opposed to biotech stocks that give around 1%. Tech regular tech stocks like that'll be something like a Google or something of that nature. They give around 2%. So 5.5% is kind of ridiculous. I guess it's because these tobacco companies need to convince people to invest in them, even though they're like killing people. But yeah, there's that. Um, but I did want to talk a little bit about the weight of stocks. Now, when you look at major analyst companies like Standard and Poor's or Moody's, these companies that also give credit ratings, they often say that they'll have stocks in a category like some will say buy, hold, or sell, or some will be overweight, underweight. Now, the weight of a stock is the valuation of the stock. It's what the stock should be going for. So, if say there's a company I was looking at, let's look at Cisco here. Uh, According to Standard and Poor's, their 12-month target is $21 for Cisco stock, and as of yesterday, it was trading at $18.01. So, because Standard and Poor's has judged that the stock is worth $21, because it's selling at 18 now, it's a deal. You should buy it. So that's underweight. Stocks that are underweight are ones that you want to buy. So, there's First tip number one, buy Cisco. However, be cautious because there are companies like Microsoft that are always underweight, but Microsoft's stock price almost never goes up. So you will also want to look at whether it's overweight or underweight. If it is underweight, then also look at the history of the stock price, because if you see over the last few months, years, that the stock price hasn't changed, even though it's underweight, then you know that probably doesn't really mean anything. And most of the companies, when they mark something underweight, or every time that they change the ratings, they'll tell you how long it's been at the current rating and how the price has changed since they rated it that. So they're kind of telling you whether their prediction was right or not. So you want to pick things that are underweight, and I don't recommend that people try to do their own research or do their own calculations for this. Use the companies that do this analysis every day. So Standard & Poor's, or if you go to hedge fund managers or wherever you want to go, these major financial services companies, use the research that they provide, but just compare the different companies. Don't use just one, use three or four. Another thing is, if you have the opportunity, you want to get stocks that have DRIPs. That's a dividend reinvestment plan. What that is if a company declares a dividend and basically they pay you the dividend, you have the option to automatically reinvest that money back into the company. A lot of people don't want to do that because they want to get that money that they're supposed to be paid and put in their pocket. However, if you do enroll in this DRIP program, what you basically do is you either get more stock without the commission cost that you paid for the original stocks, or you get it at a discount, because the company itself is not going to incur the cost that they would normally incur to sell stock. So they're going to give you a discount off the current market price, which includes that cost, to kind of compensate you for the fact that you're buying more of their stock. So definitely get drips. Let me see. Anything else? Anything else? Just a couple current events. Facebook is they have been pushing off their initial public offering for a long time, and now they're talking about skipping the whole Wall Street channel and just selling straight to investors. This is something that Google did, which was it was okay. Um, they saved a little bit, I think 1.1% off of their commissions, and some investors were able to get a cheap buy. So keep your eye on Facebook and the upcoming developments. As of right now, I think they've pushed their IPO off until springtime, and it was actually supposed to be sometime this year. So we'll see when that actually happens. But keep an eye on it. There may be a deal out there for you, and you'll probably be able to glean more information from the news as it comes along. A couple other stocks that I'm looking at. I am still looking at buying Microsoft. I used to have their stock. I stole it off because I was broke, but they give a good dividend, even though you won't see much growth in the stock itself. Um, Utilities are always good. What have I had recently? Petrobras, I had that. It's a Brazilian oil company. Um, there are a couple of Chinese utilities companies that are good. I don't have their names offhand. Um, PPL is like the Northeast, their version of our Pepco here. I had their stock for a while. They offer dividends. Pepco Holdings. It's their symbol is POM. They give dividends as well. So there are companies out there that give dividends. There are companies out there that their stock price is going up and up, and you can buy low, sell high. So just keep looking, do your research, and use those companies that lay out all the information there for you, and you'll be good to go. All right. So remember, you want to buy underweight stocks. Never buy an overweight stock, and hold stocks. You kind of have to look at the fundamentals of the company to decide if you want to buy it. So anyway, I appreciate y'all's feedback. This may be my last video that's just for y'all. I might try to push this out to more people, so I need to know exactly what's good, what's bad. Tell me what the deal is. All right, I'll see y'all soon.